What's happening, guys, and welcome back to a Monday night scan in this case, because the market was closed on Labor Day for, the US markets at least. And so on Tuesday, things will open back up. So I hope that you guys had a great, relaxing holiday. We're able to recharge and prepare for the week ahead. And we have a lot of great things that we're going to go over in scan today. I'm going to run through some charts. IU is running a deal that I'll get into in a minute. And then later on in the episode, Dawson is going to come on. He's a great IU trader. He's been on before. And so he's going to share his main watches and his thoughts on the market. So let's get right into it. The Labor Day sale, IU is running a great deal right now, and they've added a couple of special features, including with the deal, you are getting free months if you're signing up for either a quarterly or an annual deal. And then they're also throwing in bonus features like trading tickers 1 and 2. And, we run these deals from time to time, and it's just really a way for anyone who's been on the sidelines, kind of considering Investors Underground. It's a great way to just, incentivize people to pull the trigger and just to give it a try and to, see how it makes a difference in your trading. We have so many success stories come out of IU. We have, moderators like NCAS. He was just posting his quarterly profit and loss statement, which we'll throw on the screen here. And it's just to show people what's really possible with trading. And what trading in a community with great technology, with watch lists, with daily plans, and then, live breaking news, AI scrapers, and all these different things of how it can just make such a difference from trying to, hack this on your own to really being around, people who do this for a living, people who want to help you, and people who are all, working together to beat the market. So I just highly encourage you all to check out the link, check out the deals that they're running. There's a lot of great stuff. And, we talk about taking risks in the market, but, something like this has very limited downside and so much upside that it's just really, it's worth doing and worth trying. And you can just see how the results for different people are just astronomical. And, if you are focused on the process of learning to be a professional trader or even a part-time trader, who's trading like a professional, you can really just see what it can do for you and how it can open up just massive opportunities. But if you're just trying to do this on your own, it can take, 3, 4, 5 times longer than, doing it with a community who's all focused on trying to train, help, teach, share, and, coach you through this process of trading in the markets, because it's very difficult. And so having a community to kind of back you and to, help you along in that process is just totally invaluable. So click that link in the description to check out the Labor Day deals. Okay, let's get into some market thoughts. This is traditionally, the last week that we had is traditionally one of the lowest volume weeks of the entire year. A lot of people are on vacation, they're getting ready to come back to the markets in September, but, the end of August is usually a very low volume week. So we had a couple of movers, but overall it was fairly tame in the large cap space, minus a few names like SMCI, which we'll get into. But the first thing that I want to touch on is that, the SPY recovery from, the last month or so has been pretty incredible. But you can see that we were trading in this range, kind of a low volume day. And then I want to touch on what happened on Friday with that, end of day squeeze up. So there's a couple of things that really impact these types of moves that seem, crazy, wild, like an insane swipe up into the end of the day. But I kind of want to walk through the thought process of what was happening. So like I mentioned earlier, this is one of, the last week was one of the lowest volume weeks in the general market. So that kind of sets the stage of, things, it doesn't take much to move things up or down when you have a low volume environment like that. So that was one factor, low volume. A second factor was it was the end of the month. And so a lot of times either funds or different trend following, institutions, they're making big adjustments to their books at the end of the month. And so you can get increased buying or selling, especially towards the end of the day. And then the third thing that I want to touch on is the options market was kind of anticipating that. So you had a few things come together with the low volume environment. You had the end of month where a lot of adjustments were made. And the way that that kind of shows up is in the MOC, or the market on close. And what that really is, it's like at the end of the day, what's left to either buy or sell in the market. And every now and again, at the end of the month or at the end of the quarter, you'll have these giant MOCs come out, and they can be, 6, 7, 8. In this case, I think it was over $10 billion of imbalances that had to be, bought or sold by the end of the market close. So low volume environment, massive market on close, and then you had the options market where we were trading at 56, call it 56.25, 56.30 for like that last half hour of the day, and then you start to see a ton of 56.50 calls just being bought, and the premium on them was very high. It was very unusual. So if you look at how the options market is usually pricing things, it's pricing to where it thinks the edges of the market is. And so if you have an outlier situation where it's the end of the month, you are probably going to have a large market on close, and you have unusual options activity higher. And that's kind of showing that the options market is anticipating that the upper end of that range, even with limited time left, is significantly higher. So those are just a couple of clues that can tip you off to when these end of the move days are happening. It's not a guaranteed thing, of course, and sometimes they work, sometimes they don't. But if you have a situation where you have such great range on the upside, if it is right, it can be worth the risk for taking a couple of calls into the end of the day, as long as you're sized correctly for that, because some of these went 10, 20, 30x. Within the course of a half hour. So if you're risking, even if you're risking the total amount or half the amount of the call option, if you're playing small enough, the reward can be great enough to make it worth it. So that's just something to keep in mind with some of these end of the month, end of the quarter moves that have these giant swipes, especially in a low volume environment. The next thing I want to get into was SMCI. We had this giant drop on it. So a couple things happened. We had a short report come out on it. And then right after, the company said that they are delaying their filing of the 10K. So basically, that was a bad signal to the market that if the short report brought up some irregularities in the accounting and SMCI was like, whoa, we need to either verify this or we need to change something, that really took the stock down. So that's something to keep in mind for the future when you have 10Ks being delayed, that you can just see that's a big market moving, at least stock moving event. And so that's how you can get some of these very clean waterfalls. And I believe, the room was alerted to that as soon as the news dropped. We have the AI scrapers that are telling the market or telling the room what is happening as soon as it drops. And I know that some people were able to have some huge trades off of that. So just another example of how Investors Underground and all the tools can be very beneficial, because if you can catch something like this as it's happening, that is a big advantage. So big flush down, and then it kind of started to consolidate, and I'll get into this on my main watches later on, but this was just a fantastic move. And I wasn't super active over the last week. A lot of these moves happened fairly quickly, and then it was like a low volume environment. So for me, it was about picking my spots and then, on these pops, trying to grab some puts for the flushes down. But these were more hit and run trades for me, and not these big, trending thesis trades that I really enjoy doing. So in the upcoming week, we should have some great opportunities, but there was definitely some range and some smaller quick trades for me on some names like SMCI. BNRG. This was a great name that was moving, that Nate had a good trade on. And I just want to walk through kind of the thesis with it. So they had some news come out. They had the company has an ATM, or at the money, they can sell shares at a certain price. And so a lot of people were kind of banking on them to start selling that. Or selling those shares. And then there was another press release that said that the company did not really intend to use that ATM until the shares were at $2 or higher. So you had a situation where a lot of shorts felt comfortable kind of using that $2 level as their risk. Saying that as soon as it hits that $2 level, the company's going to start selling shares. And so they thought that they had a backdrop. And so what can happen is that you can have shorts get a little bit over aggressive when that news comes out, and they can say, oh, it's not going to go higher than that 2 level, or that's a great area to risk off of. But if everyone's thinking that way, and what if the action doesn't verify that? What if the company doesn't actually take any action until it's at 250 or 3 or something like that? So Nate was anticipating people using that $2 as a backdrop. It was stuck in this channel, started to base above, and then once it got past that $2 mark, and a lot of people were using that as their resistance level, they got blown out. And so you can see the volume came in, the big cover came in, then it had a failed follow through, and then the company likely turned on that ATM, and you had a nice fade back down. But it's just a way to anticipate what can happen when everyone's thinking the same thing, but the action kind of doesn't line up with that. That's how you can have people getting offsides. Another move from the last week was PDD, and this was a China name that we've had on watch, and they had not great earnings, and they had bad guidance. And this is just a prime example of how China names, they ramp up for a while, and then some kind of news comes along and they get slammed right back down. They have a very difficult market environment. It's not the same as the US markets or as other more free market systems, and so they have massive economic problems at right now, and a lot of these companies, they are forced to comply with government regulations and other things that can just really hurt them out of the blue. So this had a big flush down, and then on one of my watch lists, I was talking about how as it was basing down here, that 90 level kind of became a floor for the put options. And so what I was looking for was for it to kind of dip under that 90 level, but the puts stayed in place. The 90 strike puts were there. And so my thesis was, if we get below that 90 level, I think that we're going to drift back up and have kind of a squeeze out into it. So it ended up happening a little bit sooner than I anticipated, got down to the mid 80s. And then, as it started to ramp back up, it kind of cleared that out. But the thought process behind that is that when you have like a big put level, so like where you have a lot of open interest on the puts, that can create like a wall. And so as long as the puts are not rolling down from 95 to 90 to 85, as that put wall is rolling down, you can usually anticipate that's going to be like the lower end of the range for the stock. But when you have it, the stock's still going down, but that put wall doesn't move and it was staying at 90, what happens is that as the week goes on, those puts start to decay and it starts to drift back up, usually to that level. So in a name like this, where the options market has a big impact on it, and you have that put wall, and then it starts to get below, you can assume that it'll most of the time drift back up and close the week at that put wall. And the same thing can happen on the call side. So if you have, a name that has a huge amount of call open interest at 100, and it's trading at 103, 105, but that call wall never moved, then usually it will start to drift back down to the end of the week at the edge of that call wall. So put walls, call walls is just kind of the edges of the market. And then when you have a stock pressing up against one of those and going a little bit further, usually they kind of mean revert back to that level. So that's something I want to touch on. So let's get into the next part of Scan, which I'll give the disclaimer, and then I'll bring on Dawson. So neither Dawson nor I are financial advisors, and these are not buy or sell recommendations. This is for informational and educational purposes only. Now let's bring on Dawson. All right, we have Dawson on this week, joining us again. He was on, maybe a month or 2 months ago to share some thoughts, and that was his first time on Sunday Scan. And we want to have him back on. He's got a lot of great material to go over. So Dawson, welcome back to Sunday Scan. How you been?
Good. What's going on, Chris? Happy to be back. Not as nerve-wracking the second time around.
Yeah, definitely. And this is a variation of Sunday Scan. We have a Monday Scan because of the holiday in the US. So markets are going to be closed on Monday, and then come Tuesday, we're going to have a lot of action, hopefully. So I know that you have a lot of good thoughts and good watches for the week ahead. But before we get into that, you have any, just kind of general comments on the market? How have things been for you? What have you been seeing out there? And then we'll jump into our different watches.
Yeah, so there was last week in particular was probably my lowest frequency of trades I've had in, probably 2 months. I wasn't pushing many buttons. I had 2 days where I didn't even place a trade, which is out of the norm for me. Usually I've got 1 or 2 a day. So that was slower frequency for me. I typically focus on small cap stuff. I do keep an eye on the overall market because that kind of gives people their temperament, their aggression, and the level at which they're going to do it. So stuff like SPY was in a channel all week, just bouncing back and forth. There was a lot in the large cap space that was hesitant, waiting for that Nvidia earnings to come out on Wednesday. So I didn't really feel I didn't feel weird about being hands off in the beginning part of the week because it seemed like people were waiting for stuff like SPY to break out of a range, stuff like Nvidia to report, and then they were willing to put risk on. So coming into the end of the week, my list of names on watch started picking up. So I have quite a bit to go over for the weekend here to get prepared for.
Great. Yeah. And I was very hands off over the last week as well. I had a couple of trades here, but they were not, big trending, high conviction trades. They were more like hit and run, pick your spots in and out, and like that's it. And I think a lot of it was just waiting for Nvidia to report earnings. And we had some action with SMCI and some other things. But also, just from like a seasonality perspective, at least in the general markets, maybe not necessarily in small caps, but this week, or the past week that we just finished, is typically one of the lowest volume weeks of the entire year. And that's where a lot of people are on vacation, they're getting ready for the holiday, and then after Labor Day, that's really when the big players tend to come back, volume picks up, and we get some new trends. So I think it's totally fine to be a little bit hands off during the lower volume stuff, and then just really save that mental energy and that mental and physical capital for when the really good opportunities are there. So I totally agree with you there. All right, what do you have on watch for the week? We'll pull up your chart and then we'll get right into it.
Yeah, I agree with you. Yeah, we can go over the charts. My whole goal for the last little while has been to focus on the A plus stuff, not really grind out those day to day small P and L. Like wait for something big to set up, and then swing the bat hard when that comes around. Make the risk being put on worth it. So BOF was a main name that a lot of people had on radar. I typically like to avoid the day one gappers, and a lot of times they fail, more times than not, but they also get caught on something like this. So I typically just avoid it and wait for some sort of daily structure to set up. After this day, I think a lot of people start to take these names off radar. Range starts tightening up, volume starts dropping off. And that's more when I get interested. It's a lot less crowded to the long and the short side. I've got the psychology of traders that are now involved in this multi-day move that I can exploit and take advantage of. So knowing that a lot of shorts trade these day ones and fight them, to be frank, you've got this VWAP here down at the 130s was day one VWAP. Day two gaps up like crazy. I had shorted this overextended gap up, and I was expecting a bit more pull, like to go red, and it barely tapped red and held it roughly over under. But 220 was its blowout level day one. Day two, it blew out through it and sat back, retested it again. And then day three, 220 was that key level again. So given that this thing is now setting higher lows, volume is drying up, and knowing where shorts were involved on the high volume day, I think shorts are underwater. If they're still in there, I think they're fighting it. So if this thing can build and prove itself over this 2 to 220 range and start to build, I look for that secondary move, that breakout. XRTX, this daily chart is similar. No overhead resistance, history of multi-day moves, and same kind of thing. Looking here at the volume profile, looking left, we've got that ironically 220 range, and it blew out there in after hours and has just gone sideways. So I'd expect this thing to fail to follow through the next day and continue lower, break below $2. But if it doesn't and it starts acting out of what I think it should do and starts to build over 220, 240, then I'd be looking for that 3 retest and breakout. So those are that liquidity trap style setup. XRTX, biotech. So I'm not super familiar with how the catalysts and stuff play out. I typically leave that to professionals. And I let the bio guys kind of tell me what that means. And BOF, the PR they had was emphasizing their earnings catalyst, but the earnings was put out like back here, August teens, like 14th, 16th, somewhere around there. And they just were emphasizing like, hey, our earnings are up like crazy. Hey, we reduced our debt, but that info was already put out back here. So if shorts are there for a fundamental or technical reason, I'm going to be watching there. Some quiet ideas. The monkeypox names went on a wild run when headlines were still coming out, and there hasn't been any come out since this secondary move. This gap day right here was VRAX putting out an offering and kind of dampened that sector move. But they're consolidating right near the lower end of their daily range, GovX, VRAX, and APDN. APDN was a break of prior bar lows on the way up. It's kind of extended itself a bit to the way down, might have a snap back and then look to join that trend lower. VRAX looking for daily chart breakdowns, sub 420. It's the range is starting to tighten up and it's touched it multiple times. Usually the more times it touches it, it's eventually going to break it, whether it holds below it or not, but usually they break it eventually. Just kind of knocking on the door, waiting for it to break down. And then GovX, same kind of thing in this 420 range. So if no more news is coming out on them, there's no reason for them to be up anymore. So those could be quiet fader ideas. Lumen, I'd throw in that same basket where everybody had it on watch on this front side parabolic move. And 640 was key level up here on the front side. And then it retested it here on a steady grind into the 640s. And I bought it on this day when it broke through that 640s and took a loss on it because that was that key level, but it never proved to break over it. So now it's broken down and flagging below key levels. So I'd be looking for this higher low trend to break down and join that trend for lower. As long as 540s continues to act as a top and break of prior bar lows, be looking for a 5 breakdown and unwind. Quiet idea. I don't think anybody's watching this anymore, so I'd expect it to be less crowded. BNRG, day one runner, I typically avoid it. And this thing round tripped like crazy into close. People started getting bullish as it's holding over VWAP and starting to trend. And once this 180s, $2 range breaks down, it was heavy as a sin. So I'd be looking for any pops back into this level where everybody's bagged from and potential, not a huge trade, but maybe a 40, 50 cent trade for a pullback. TOVX, this one was run by the same pump group, newsletter, app, whatever you want to call it, as ASST. So once the blowout comes and goes, it likes to sit back. So TOVX, once the blowout comes, I think it likes to sit back. This thing's now gone from 3 to 7. That's that 100% move I like to see for first red days. And all the volume was traded right here off the open yesterday. We're filming this on Saturday. So Friday, it was blowout off the open and steady pressure all day. Pops verse 6 would be ideal, but higher the better, and look for this trend to fail. And if this thing stays red on Tuesday, almost said it. If this thing stays red on Tuesday, I'd be looking for a first red day pullback. And a couple names I sometimes get questions on. I do my YouTube watches and stuff, and I'll get some questions in the comments of, this is a nice daily chart setup. Why aren't you watching it? And it's not just the daily chart setup. There's volume, there's range, there's catalyst, there's other indicators that I like to take into account. So COMM is very similar to that daily followed through setup. And it was setting up nicely as it's going parabolic, but the range starts tightening and this thing is only trading 30 cents on a big outlier day. So if I'm looking to, make 30 cents on a trade, I'm going to need to be risking 5 to 10 cents. And just with the way this thing trades, I don't think I can get there. So just the restricted range, even though the setup is nice, this isn't really a main watch for me. And similar with load, this is setting up for a breakout trade with no overhead resistance volume wise. And typically that 26 break would interest me, but this big outlier day went from 22 to 26. So a 4-cent trade, I'm going to burn that on commissions trying to scale into that. So this one's not really a main watch either. So although those are nice charts, just examples of why I wouldn't watch them. But I think I've got enough in that list of names I've got on watch for Tuesday.
Yeah, those are great and very comprehensive list. And then just to kind of recap for people, the types of setups that you like to trade, they fall into a couple of buckets. You focus a lot on the liquidity traps where you have that big volume day, nice breakout, then it kind of, fades back. Shorts are in there expecting a full round trip, but it starts to kind of base again and then squeezes out again. That's one of them. And then the other ones, like the classic failed follow through. And could you just walk through, all the different setups that you're really watching on a day-to-day basis for people?
Yeah, yeah. So I don't really focus like intraday, like those daily drivers that some people will mention in their room. That's just not my style. Like I said at the beginning, I like to get those A plus setups and size into those. So when I got the daily drivers, it kind of feels more 50-50 to me whether I'm going to get on the right side of the trend or not. So I don't really like trading those. I focus on a daily big picture, daily chart pattern. So something like BOF, where it goes from 60 cents to 260, that's now an overextended gap up blow off. I'm looking for a first red day pullback. So I'm looking for extension on the front side for a pullback mean reversion. If this thing were to have pulled back from 260s and keep fading down to 140s, 120s, I think that pulled back too much, and I'd be looking for that little reversion on the other side for a bounce trade. And then big picture liquidity traps, daily chart breakouts. When I believe shorts to be stuck, volume starts drying up, and they got no way to get out, and it starts building over key levels that I've noted on the front side that now become important on that secondary leg. So if I were to categorize them, I'd say failed follow through momentum. I had posted on Twitter yesterday. This was like a super, super good example. Let me go back here. So Serve had that $10 breakdown on the daily. I can show the daily after. But this is like textbook failed fall through momentum. I'll show the daily in a second why 10 was key, but you get that blowout through it on exhaustive volume. $10 acts as a support, and once it breaks down, you get that unwind. So the intraday aligned with the daily chart breakdown here of $10 on a back retest. So that would be a failed fall through momentum setup on the intraday. Parabolics, first red days, backside bounce, first green days, and like multi-day breakouts, liquidity traps. So there's like four main setups I trade there.
Excellent. Yeah. And it's really just, as people see these charts play out and, it's a very cyclical thing, whether it's with small caps or whether it's with large caps. It's like the cycle of a run. And, it's usually like some kind of a press release, some kind of catalyst that gets something going. And then it's really a matter of like, was that catalyst just fluff and does it kind of round trip back? Or is there a little bit more substance to it? Or was it too crowded on the short side? So it needs to actually blow out shorts before it fully fades? Or is it, a long crowded? There's just a lot of different, things, but they all follow like a similar template. And so it's really just familiarizing yourself with what template are you working with, who's kind of the driving force behind it, who's stuck, and then just kind of making a plan around that. And then it's all about finding just a decent level that you can risk off of, something that should hold as support or should hold as resistance, and then looking for that trend and basing it off of that. And then as long as you have a positive reward to risk and it's a highly or at least decently probable thing happening, that's kind of what shapes your expected value as a trader. And that's what shapes the expected value of a setup. And then a lot of times you don't actually know what the expected value is or the probability is until you get some data together, you trade them for a while, and then you can kind of get a better understanding that way. So yeah, it was a great recap of a lot of different names that you had on watch, and I think people are going to get a lot of value out of that. So I will bring up my screen now, and I'll take yours off, and just a couple things that I'm watching for the upcoming week. And again, like more of my style is I'm looking for, big moves, big trends, and I'm looking for basically, can I join that trend as it's working? And then when it gets to a point of either it'll run into resistance by looking left, or it has like a blow off move, then I'm looking for more that mean reversion. So, most moves, at least the ones that I'm kind of watching, it's like a trend is in place, it starts to speed up, and then it has a mean reversion. And so I'm saying, or I'm looking for it, I'm seeing, is this trend still in progress of playing out? And then once it has like that big blow off move, what would give me a signal that that could be the completion of the trend for right now, and then see if you can play the mean reversion on that. So AFRM kind of fits that bill. They recently released earnings and they showed that they were on a path to profitability sometime next year. At least that's what they say. So when you have some of these names that are, they've been beaten down for a year, a couple of years, they have a lot of factors going against them, and then they have some kind of like pivotal earnings release or something that gets people excited for a while. They usually have like, the short covering come in, you have new longs position in there, and then you have like that new trend start to take place. And then it'll get to a point where it gets a little bit crowded on the long side, maybe blows out shorts, and then, kind of sits back. So those are the types of moves that I like to watch. And if you see on AFRM, if you zoom out a little bit, you can see, around that 50 level, give or take a couple of dollars, we could have like a nice squeeze out into that level. And then you start to have some resistance looking left. And so I would be looking for some kind of parabolic up into that and then wait for it to kind of stall out, get a little bit crowded, shorts get blown out. Maybe it's on a Thursday or Friday. Maybe you have the options, start to decay a little bit. And then so you might have that mean reversion trade. So for the upcoming week, I'm looking for something like this to continue to go up, to have that parabolic move off and possibly play that with calls on the long side. And then once it has that big, capitulation move and it fails to follow through, then see if there's a mean reversion trade on the backside of that. So AFRM is the first one I have on watch. The next one is NVAX. They had some news on Friday. FDA approved like one of their products. And so I think it could get some hype, some buying, maybe some short covering for a day or a couple of days. And then, maybe as it runs into that, $14 level or so, it'll have a nice, pop, start to fail to follow through, and then maybe mean reversion back. So I think that could be a play on the backside there. Once, the news kind of runs its course, there's some covering, you have some people waiting for the breakout, and then possibly it starts to fade back. But if it ends up staying, strong and basing, then that, voids my kind of mean reversion back down thesis. Because like what I'm looking for is, when it gets to a key level, when it gets to a resistance point, when it gets to a support point, you have to see what is the action around that. Is it like moving up to a resistance point, but it's soaking every dip, it's grinding higher? That's a sign that there's still a lot of demand for the stock and that it's not a capitulation move yet. What I'm looking for, like when something exhausts out into a resistance point, is I want to see a couple of things. I want to see a lot of volume come in. And that's a sign that demand from longs is there, but then also the demand from shorts covering is there. So the reason why you usually get a big volume spike around a capitulation, it's because you have two parties all contributing to that volume. You have the longs who are buying it, and that contributes to the volume, and you have the shorts that are covering. And so when you have those two things come together and it peaks out and it starts to struggle at a level, that's a good sign that that level is a good support level. You had a blowout, or I'm sorry, a good resistance level. You had a blowout into it, and then you're looking for it to fail to follow through. And if that was the peak, then that's usually a good sign that you can risk against that level for the downside. So NVAX will be on watch for the upcoming week. SMCI, this got really beat up. It had a short report against it, and then immediately after, they delayed filing their 10K, which is usually not a good sign, and it could mean a couple of things. It could mean that what was in the short report either got management to say, hey, we need to actually check this. Like if people are noticing issues, and management sometimes is far removed from the accounting process, like the CEO or things like that, they're not directly involved with the accounting things. So if it scared them and they said that they need to look into this to make sure that there's nothing wrong, that's one thing. But if you have, the accounting department or the CFO or people who are more involved with that being like, we need to adjust a couple of things, then that's bad. So they had another press release saying that they don't think that there's going to be material changes made to the 10K, but it sounds like it's under review. So I think a plan for two scenarios here. One of them is that, there's no real issues and they end up, filing their 10K in the near future. And maybe you get a nice bounce and clear out of short interest. And maybe, you retest that, 5 or, 550 level or something like that. Or if they, pop a little bit on the press release that they're going to file it in the near future, but it still is acting heavy, then you could have some further downside. So a plan for two scenarios. There's so much range on a stock like this that, I don't really get a strong bias either way. I just know that whatever the market decides to do with this thing, there's going to be 50 or 100 points of range that I can play with either calls or puts. So I'll be looking for the news, looking for the action off of that, and then just basically making a plan for two scenarios. The next name is Dollar Tree. So we had Dollar General, DG. They reported earnings and had a huge gap down, like 30% or something. Weaker consumer demand. Walmart and some other places are taking market share from them. So Dollar Tree, I don't think that it's that different from Dollar General. So I think that the demand profile from consumers and everything is going to be pretty similar. And Dollar Tree has earnings on September 4th. So I think that there's a decent chance that it either is trading down in anticipation of that, or it kind of stalls around and possibly a gap down on earnings. So if it does the earnings gap down like leading into that, then that could be a move to play with puts, in my opinion. But then once it gets through earnings, I don't hold through earnings. I would look for a trend after that. And the final one is INTC. So they had news that they might break up the company a little bit or spin off some divisions. And that was something that was not expected. They had some problems with earnings a while ago, and basically had a huge gap down on it. It was in a channel, and then they had some kind of pivotal news. So I think that you could see some more upside on this, and maybe, clear out, get into the high 20s or something. And that could be a move to play with calls. And then, once that kind of stalls out or once it exhausts out, I see that volume come in, I see it start to hit against a resistance level and struggle, then that could be, the sign that pop is done. So those are the main moves that I have on watch for the upcoming week. And then we have all the other stuff with, post NVIDIA earnings. We'll have trends in some of those names. And then we have an Apple event coming up soon. So we'll have some news and some trends around that, I'm sure. But these are just some loose names that I have on watch. But, a lot of my style is I have kind of these general themes or theses, and then when the market opens, I'm seeing what is acting like I'm expecting it to, and what other things are moving or running, and then I'm day to day just kind of sifting through the best opportunities that I can find for basically the path of least resistance. Where's money naturally flowing to? Where's it naturally coming away from? And then seeing if I can join that. So those are the main things that I have on watch for the week. And Dawson, I appreciate you, coming on here and sharing your thoughts as well. You had a lot of good material that you went over. Do you have any other, comments or thoughts before we start to wrap things up?
Yeah, I could touch on two things. One thing I heard was when you said you're coming into next week, you said I have a plan for both sides, and that's not trying to make a call one way or another. It's you're coming in prepared for, if it does this, then I will do this, and if it does this, then I'll do this. So you're not trying to make a call whether the markets are going to go up or down. You're going to have a plan for whichever way happens, so you could react faster to it next week. And the second thing that I always close it out with is get in where you fit in and make some memories.
Yeah, that's a great piece of advice, and I totally agree. And yeah, the plan for two scenarios, I think that's just super important, especially as a trader. If you have strategies for the upside, for the downside, if you kind of know what to look for, then it's just very natural that if something has a lot of range, then you can have a plan for, is it towards the upper end of that range and looking to mean revert? Is it at the bottom end of that range and looking to go higher? So you can definitely have a plan for two scenarios. And then the last thing is that just as a reminder, we are running the Labor Day sale in Investors Underground. And I strongly encourage you to take advantage of it, to click the link, see what the deal is. They're adding extra months to memberships. They're adding, free courses and other things. So IU is just such a special place to be, to trade. You're with a group of people who spend, hours putting together their watch lists, their trade plans. They're sharing it in real time, and you have the best technology in there. And it's just a great place to develop as a trader, as opposed to just trying to hack it on your own. And we have so many success stories coming out of Investors Underground, and we have some moderators posting like their quarters, like NCAS just did, and it's just incredible to see what trading has done for them. So I encourage all of you to check out the Labor Day sale in the link below, and I hope that you all have a great week ahead. Dawson, thank you for joining me, and have a great week.
Of course. See you guys.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.